Welcome back to Rockstock Channel. It is Thursday, April 3rd, and we are back with an update with our great graphite friend, Eric Desaulniers, CEO of Nouveau Monde Graphite. Since we last interviewed Eric in early December, the company raised $50 million in equity from the Canada Growth Fund and the government of Quebec, and last week announced an updated feasibility study and a roadmap to final investment decision from their integrated Mattawinnie graphite mine and battery material plant in Bécancour, Quebec. Nouveau Monde also uplisted to the Toronto Stock Exchange's main board from the TSX Venture Exchange, ticker symbol now NOU.TO. As a reminder, Nouveau Monde also trades in the New York Stock Exchange, ticker symbol NMG. All these recent milestones followed a banner year in 2024 of strategic partnerships with GM and Panasonic, which we covered in our last interview. Like many junior developers of battery raw materials, Nouveau Monde has been on a wild ride these last few years. The current stock price is about $2.15 Canadian, which is about where it was 4.5 years ago. But that's down 90% from the 25 Canadian dollar high during the pandemic and the Tesla Battery Day euphoria in early 2021. Nouveau Monde's current market cap is about 330 million Canadian dollars or 231 million US. The stock's up 15% since our December 5th interview, but is down slightly year to date. A reasonable performance considering the political uncertainty both under Trump and as Canada approaches an election later this month. For disclosure purposes, Rodney and I are not strategic advisors to nor invested in Nouveau Monde. But over the past 5 years, we've gotten to know Eric well and his leading shareholder, Pallinghurst, and we visited site more than 2 years ago. We are not, of course, financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. You can follow Nouveau Monde on X at NYSE_NMG, and you can follow Eric at E_Desaulniers. Note that a written summary of this interview will be published in the next edition of RK Equity's Lithium-ion Bull. Please register your email at rkequity.com if you'd like to receive this newsletter directly to your email box. And please make sure to like this video, subscribe to Rockstock Channel, and leave a question or comment below. And with that, welcome back, Eric. Rodney's got a bunch of questions, and I'll add a few toward the end.
Super. Thanks for having me back. April 3rd, indeed, right after the Liberation Day of the USA. Yesterday, big day.
I was going to reference that in the intro, but I'm glad you did.
Yeah, I saw a tweet, Eric, that said that Trump had liberated everyone of their capital gains tax. But congrats on your recent announcements. If we can go back in time for a moment, Nouveau Monde has spent $150 million roughly on your demonstration plants, etc., to prove your ability to produce on-spec material. Most junior companies never do this. It is a standout. I remember coming to visit your facilities and being impressed. Can you just give us a recap on your journey up to this point and all that spend you've done?
Yes, indeed. So you remember, Ronnie, my background is geophysics. So when I started exploring, was it 14 years ago for graphite, when graphite price was like 4 times the level it is today, everybody were looking for graphite. So we discovered a deposit in 100 kilometers due east of the only producing large mine in North America that used to be operated by Imerys. So we thought it would be easy. Let's develop a flotation circuit self-concentrate to supply this big gigafactory in Nevada that was just getting built, So we realized, well, that's not enough to own a deposit. We really need to develop the transformation, because otherwise it will go in China, where 100% even today of the transformation occur for concentrate. So 78% of the mining of graphite comes from China, but 100% of the transformation. So we clearly understood it is not a viable option. So we needed to build a full vertical. So to do that, we needed to build a demonstration facility to demonstrate to ourselves and to our engineers and our shareholders that we can do it. And also, more importantly, to large strategic investors and clients like Mitsui, the Pattingers guys, but also now the customers that we have, GM, Panasonic, that, we are as close as you can be from the large supply chain that exists in China. So we needed to invest this kind of money just to have a nameplate capacity of 2,000 tons per annum, but not really to make money, more for qualifying with customer. And after 4 years of hard work last year, that's what we were successful doing to pinpoint the offtake agreement that we have with Panasonic and GM to finance this project that we just published the feasibility study Monday. So that's a long journey, but that's a large project, very important for the EV transition. And we need to have the scale, we need to have the relevance for our customer. And I believe now we're at the right place after all those years of developing the project and the market evolving in the right direction for us.
And Eric, off the back of that spend and the years of work that you've done, you've signed binding offtake agreements with GM and Panasonic that you describe as your anchor customers. Can you outline, those parties and the general principle that guides the arrangements you have with them?
Yeah. So last year, maybe just over a year ago, Panasonic and GM separately invested both $25 million US each to finance the project all the way to FID decision this year. And also, more importantly, delivered a long-term offtake agreement with precise details that allowed us really to advance the lending discussion with our lenders. Our lenders were part of the conversation, making sure everybody understood each other's needs in terms of having certainty of a customer buying the production. So 7 years long-term offtake agreement with Panasonic, 6 years with GM that are bankable. And now that we've delivered the feasibility study to them, we are getting into the tranche 2 discussion that was already announced, like $275 million US of equity to enable the project financing. So that's where what I'm doing. I'm LaGuardia today, but this weekend I'm flying to Asia. So I have a lot of very important meeting to discuss this feasibility study. What will be the last condition precedents we need to lift on the offtake to make sure we get to the project financing. So great offtaker, you need to have that kind of partners. Otherwise, it's difficult to justify engineered material like anode material. Need to have that kind of support.
And Eric, Howard mentioned in the introduction, you recently completed an updated feasibility studies, a study that covers both the Matawinie mine and the Bécancour material plant. What were the key highlights from that update? What should investors take note of in that?
But the key highlights is, I would say, we did another feasibility study 3 years ago prior to have the offtake with customer. So now this feasibility study is really after having onboarded those customer, and we have precise volumes, precise specification. They introduce us the right offtake, the right suppliers from Asia that built and operated such operation in the past. So we significantly de-risk the project in this feasibility study, while maintaining a similar economics. What I mean by that, we still have a 17.5 post-tax IRR on the project. We were at 21%. There's a slight inflation in the last 3 years, as we all know. Inflation on the cost side, but not on the pricing side, because in China, in the last 3 years, there was an oversupply of graphite. So pricing is based on our offtake and forecast of our third-party market intelligence company working with us, looking at the offtake and making a fair assumption what should be pricing for an MG based on those offtake that contains different indexes. So it's a very solid feasibility study. We're similar NPV than 3 years ago. So very proud of the work the team did, and we're fortunate to introduce this feasibility study now to all stakeholders, governmental partner that we have like IQ, Kennebec Road Fund, but also the Mitsui of this world, the Panasonic, GM, making sure we all move forward in the project financing.
And Eric, the 17.5% IRR after tax, is there scope, to get sort of grant funding or soft loans that can improve that number?
It's based on a 100% equity, non-levered investment. I mean, there's no loan included in this number. However, in Canada, it was approved the investment tax credit, so it's part of the fiscal calculation behind. We included in the feasibility study the clean tech manufacturing investment tax credit that was approved by the Canadian government. So this tax credit has a significant impact on the post-tax profile of the feasibility study. So that's why if you look at pre-tax and post-tax, it's very similar, because as part of the tax, we have this tax credit, that is very beneficial for the first few years of the project. So only this part was, I would say, was included in the calculation.
And in terms of support, is the local and federal government still very supportive and a strong supporter of the project?
Yeah, you can bet that after Liberation Day of USA, Team Canada, that is financing our project, is very interested into launching major projects that are ready to be really an important player worldwide for the critical minerals. It's a first priority for both our Prime Minister, whoever is elected, but also our Premier of Quebec, who's playing a significant role in the project financing. Our Premier Legault is on in every media talking about the importance of launching critical mineral projects. He was in Germany this week, in Hanover, talking about that. So he's very active promoting our critical mineral sector in Quebec. And in this sector, we're most likely the most advanced project by a margin. So I never seen so much interest from my local partners to make sure that we start the project now that we have de-risk and we have the right program in place to launch to make this project financing. So very positive.
So government is acutely aware of the need for localized supply chains.
Exactly, and just a quick note on our relationship with the U.S. Obviously, 80% of our production now is going to GM Panasonic that are located in the U.S. We don't see, and our customer don't see any path forward where in 2028, when we are in production, there will be tariff on graphite, because it's either China or Canada for this part. The geology has no border. The graphite is in Canada for a geological reason. So, and 2/3 of what we sell in the U.S. is raw stuff. It's oil and gas, it's potash, it's primary aluminum. It is critical minerals. So we see, yesterday tariff. Canada was not part of the mix. I think the first of all, what President Trump wants is to bring manufacturing back in the USA. That's his primary target. And to do that, you need raw material from Canada that will be upgraded into a better product in the US. I think he started to realize that Canada, US really work together. And the only reason why we have a trade deficit is just because we have a large country with a lot of resource and not enough consumer to buy American stuff to consume it, So anyway, so I see graphite not being impacted by our relationship with the US. However, we need to watch the demand for graphite. Is dictated by our customer ability to continue building a cell factory. GM numbers were phenomenal in the first quarter. I don't know if you saw it, Ronnie, but 94% growth compare Q1 2024 on EV alone, 17% sales. Most likely the tariff will impact a bit more GM, and the other our other customer, Panasonic, make the sales for Tesla. So Tesla had a difficult time in Q1 compared to Q1 last year. However, now the tariffs are potentially more advantageous for Tesla. So we'll see where it goes. I have 40% of my heart on GM, 40% on my heart on Panasonic. So hopefully the overall demand stays strong in the US, so we can deliver this black powder to our friend in the US to upgrade it into batteries. Yeah.
And Eric, obviously critically, FRD, where are you in the process of securing the CapEx funding for the project?
Yeah, so 3 major working streams now that the feasibility is done to deliver project financing in the next 2 quarters, I would say, in the second half of 2025 to kickstart construction. So the first one is, now that we have feasibility study, we need to complete all the technical due diligence with the technical advisor to lenders. So they hired many different firms to review this feasibility study, make sure there's no gap. So lenders are happy about that. So we're doing this, finalizing the construction strategy. We need also to see all the final contracts for the major part of the project ready to sign. So we're finalizing that, how we will build the project. So that's the operational side. At the same time, we need to confirm the customer. So make sure they're there for the tranche 2, make sure we lift all CPs. That's my primary work going in Asia, making sure we complete that. And also potentially announcing another large customer. Now there's a lot of interest from Canadian cell maker to finally buy local. So we do have a lot of discussion that are intensifying with a third customer potentially, but that's not strictly needed to finance the project. But because we already have more than 80% through offtake agreement. But if the deal is right, we will strike a deal with the third customer. And then also, obviously, finalizing the structuration and all the different terms of this project financing. So I'm working with my CFO on that also full-time. So I have 3 full-time jobs completing those 3 working streams like ASAP. We need to finance while we are needed in this market, and we can take a lot of the market share as well.
So in terms of that, Eric, LFP cathode technology has gained huge traction, especially for energy storage applications. Do you see that as a positive for long-term graphite usage?
Oh yeah, it's very positive. LGES just announced that the plant they have purchased from GM prior to Christmas, they're converting it to an LFP facility that will be dedicated to energy storage solution. I don't know if you saw that news, but for us, that's what we need to monitor. Is we need to monitor how much in North America specifically and Europe, what are the usage for the application for the lithium-ion batteries, and what are the chemistry and how much graphite is impacted. And for LFP typically has way more natural graphite than synthetic graphite. So it's a positive for us because costs matter and the size, everything point toward ESS becoming a more and more important part of the demand compared EV. It was all an EV story before, but now we see like 25% of the market being ESS in the future. If we keep installing 1 gigawatt hour per day of energy storage facility, it's 1,000 tons of graphite per day. It's quite a lot.
And so one of your latest releases suggested that the mine and battery material plant could be in commercial production within 3 years. From a global perspective, do you see the graphite market shifting to a supply deficit in that time frame?
Many things to say about that. First of all, it's been 3 years difficult for graphite pricing in China, but the last month, we're just monitoring the new release early April of the different market intelligence firm we're using. there's an uptick finally after 3 years. And why this uptick? Mainly driven by needle coke increase in pricing. Needle coke price, who is the precursor of synthetic graphite production, has a 68% increase in cost. So it's quite significant because the electrode maker, who are the biggest consumer of this needle coke, recently were struggling with low quality coke, and there's some plants of coker that shut down. So now they're paying a way better price for this coke. So the synthetic graphite producer in China is struggling to get this needle coke. So a 68% increase in one of the most expensive part of their supply chain is quite significant. So now synthetic graphite pricing is going up. And in China, not so much in North America, the blend composition doesn't change much for the tier 1 customer in North America. But in China, we see a switch to natural graphite that should increase pricing in the upcoming months. So we're quite excited to follow this trend. But that's really local to China, I would say. And the thing we need to think about is yesterday, the Liberation Day, it's all about trade deficit. It's all about the deficit we have in the US compare China. It's the same in graphite. All graphite comes from China, and there's a clear deficit, and we need to make more graphite production outside of China. So the trade deficit itself, the graphite deficit in North America is massive. So any smart cell maker will need to have 30% of their supply chain coming from local. You cannot have 100% relying on China. So we don't want to be the dominant player in any supply chain. We want to be this guy that provides a safe alternative to China for 25 to 30% of the demand of each of our customer. But you're right, fundamentally, if we want to see a big spike, like as we've seen in lithium in the last few years, we need to see it coming from China as well. And we see this 2025, 2026, it will be the time where nobody is building a graphite plant anymore in China. We have a lot of appetite from suppliers in China to work with us because now they're not building anymore in China. They built enough. So this is the moment we'll see the next 3 years, some sort of, and the demand is booming. If you look BYD, they're building a plant, the size of San Francisco. So the demand for lithium-ion keeps exploding in China, but the graphite business should be better in the next 3 years in China. But even if we don't need to wait 3 years to see that, we need to build alternative here in North America, and our clients knows that, and they're willing to invest in project, get their resource on board, human-wise and money. So because they see that they need that alternative, irrespective of what's going on in China.
Great. Howard?
All right, great. Just wanted to pick up on a couple of things. GM, you talk about Liberation Day. I was thinking about it. Lithium America is in Lithium, who has GM as a partner, announced an FID, the same week that Trump Liberation Day was announced. And GM is also substantial, in MP Materials as a partner in the rare earth space. So more than any other auto company, GM has taken significant equity stakes. You definitively seem to be their graphite play. Could you give us some insights, I guess, into whatever you know? And that's good. I didn't actually see GM's 94% growth in EVs, 17% of total sales. That's excellent. If you can just give us some insight into what you know. It's a very political company. Mary Barra, depending on who's the president, always has significant influence. And I noted there were a bunch of automakers at the presentation from Trump yesterday. So if you can help us understand that political dynamic and corporate dynamic at GM and from your relationship there.
Yeah, so what I can say is, in the early days, people were there was a bit of critics on the strategy of GM, and I'm super happy for them that they are demonstrating to the world that their strategy was the right one by investing massively in localizing the supply chain. That was the whole basis of it. So they were the most aggressive, in my view, to do that, and now it's playing well in their for them. I mean, they delivered on investing in Lithium Americas and us and MP material, and so they really and also to this big cathode material plant they're building in Canada as well with POSCO. So I mean, they are doing the right things, and now the sales are great. If you're driving a GM, we have one at the mine, a GM Silverado EV is fantastic. It's very good quality EV. So all it's a great strategy. All azimut, it's working. So we're proud of them. Obviously, now it's all about market share. It's all about who will own market share. Previously, it was a Tesla story only in the US. And now Tesla is being competed with by GM, by Ford, by others as well. So now I'm sure that those tariffs on automaking have something to do with gaining market share in EV. The EV market becoming very important. Last year 1.3 million EV sold in the US, and now GM is adding this 94% growth, taking some significant market share to Tesla. We know about Mr. Musk being very close to Mr. Trump. So and we need to say it. Tesla are the most American-made car. I mean, they do a lot of it in the U.S. So it's very intriguing to see how it will play out. But when I talk to both our customer, buying graphite in Canada that will be produced in 2028 is a priority for them. I don't see them shying away from that. They have way other concern around the tariff than the graphite coming from Canada. So my point is, I believe like GM and Panasonic are in a good position to deliver this project in partnership with us.
Okay, great. And the other question just is on the election in Canada. It looked like Pierre Poilievre was going to run away with things until Trudeau stepped down, and then Trump was bullying Canada. And now, if you look at the poly market prediction, it looks like Carney may win. I don't know, but I am on X and elsewhere. I've never focused so much on Canadian politics as I'm looking at it now. How do you read these tea leaves, and do you see much of a difference as it pertains to critical minerals and maybe soft loan, federal funding, support, permitting, depending on who wins for Nouveau Monde?
What we need in mining is stability. Both on the Quebec side and Canadian side, they have established program and a long-term vision of developing this supply chain, and it's not made in a mandate. You need to have stability. So in that sense, what the Liberals did on 4 critical minerals took a long time to get installed, and they're just like Canada Growth Fund investment is the first investment in mining after all those years of Liberal government trying to make the right move to establish the program in place to support the construction of the supply chain. So we're starting to see the fruits of what they've worked on for many years. So hopefully those programs stay in place. So we have a lot of support from Team Canada. So a lot of different Canadian organizations, but also from the Quebec government. So in that sense, it was very popular prior to the trade war with the Americans. It was very popular to say something like axe the tax, or to say something like we'll cut all programs to cut the waste. We see there's a need for that. Obviously, we need to reduce the spending at the governmental level, but we cannot just too dumbly cut everything out. So even Poilievre changes mindset on that. So you're totally right that the Trump administration is changing the landscape totally of the Canadian election. And we have a very smart guy in Mark Carney who made a lot of very difficult decision in the past economically. So I feel irrelevant which party he is in. In Canada, we're listening and we'll vote and we'll see. We're not as much loyal to a party. We can change our mind between two parties, and typically Ontario dictate who's elected and Quebec dictate if it's a majority or a minority. So we'll see how it goes, but I would say yesterday not having tariff from the U.S. at their Liberation Day, while the rest of the world received massive tariff after a 10 minutes phone call between Mark Carney and Mr. Trump, will be seen very positively by the constituent in Canada for sure.
It's interesting. I mean, you're on the East Coast of Canada. Again, I don't know politics so well, but Poilievre is on the West Coast. I mean, there's some lament out there that if Carney wins, Alberta may, take a page from Quebec's playbook and, may look to secede. I don't know what you think about that, but again, some fund managers and other people that I follow on X are very angsty, about potentially a Carney win. Will Poilievre be good for Nouveau Monde Graphite if he does win?
I hope so. We'll need to do again some to make sure the new conservative government, if it's elected, we'll need to make our case for sure. And I'm sure he understands as much as Mark Carney the importance of critical minerals and financing those big projects. And the Poilievre of today is not the same Poilievre than 6 months ago, I guess. So you understand the importance and vis-a-vis our economy to launch those major projects. So overall, I believe we'll be able to make our case and will stay relevant for Canada for sure.
Interesting times. What is it, April 25th or 28th, the election?
28th, I believe.
28th. Okay, 25 days. So we're watching closely. I don't have more questions now. So Eric, appreciate your taking the time sitting there in LaGuardia. Good luck on your Asian visits. And you've had some I see. Yeah, LaGuardia is a much better airport than it used to be. So hopefully you're in a decent place there. But anyhow, great seeing you. Look forward to interviewing again in the coming weeks and months after your visits and another. Like I said, last year, I do see some parallels between yourself and Lithium Americas, which ticked off a number of milestones last year en route to an FID. You still have some financing hurdles to overcome, this year, but it's nice to hear that graphite prices are ticking up, and let's hope that continues. I didn't know the needle coke, price rise, so that's interesting. That's something we'll look into between now and our next conversation. All right, safe travels, Eric. Good to see you.
Fantastic. Thank you, gentlemen. Always a pleasure to talk with you.